Real estate or the stock market? Which is the better investment in 2025? It's one of the oldest debates in personal finance. Both have made people millionaires, and both have destroyed fortunes when handled poorly. But as we step into 2025, a year shaped by high interest rates, rising inflation, new AI-driven economies, and shifting global demand, the answer is not as simple as it used to be. So today we will break down the truth about real estate versus the stock market, the risks, the returns, the hidden traps, and the opportunities that can change your financial future. And by the end of this video, you will know exactly which one is right for you. Let's start with the basics. When you invest in real estate, you're buying physical property, homes, land, yen, rentals, or commercial spaces. It's tangible. You can touch it, live in it, or rent it out. When you invest in the stock market, you are buying ownership in companies. You don't see it physically, but you own a part of the world's biggest businesses. Both can make money, but they do it differently. Real estate builds wealth through appreciation, rental income, and tax benefits. Stocks grow wealth through capital gains and dividends. Now, let's see how each performs in today's 2025 environment. Scene 1. The interest rate shock. In 1924, central banks kept interest rates high to fight inflation. And that decision reshaped the investment landscape. Real estate took a hit. Higher mortgage rates made home loans expensive, cutting affordability and cooling demand. In the U.S., mortgage rates touched around 7% to 8%. Buyers backed off, and prices in many cities plateaued or dipped. For investors, that means two things. Lower property values can mean opportunities to buy, but also slower growth in short-term returns. Meanwhile, the stock market rebounded faster than expected. Tech companies adapted to AI. Energy firms thrived from global shifts. And investors who stayed in the market through the chaos of 2022 to 2023 started seeing strong gains again. So, if 2024 was a year of real estate slowdown, 2025 is becoming the year of selective opportunities. Scene 2. Liquidity, the freedom factor. Here's something most beginners overlook. Liquidity. In real estate, your money is locked in. If you need cash, selling a house takes time, paperwork, and often a price cut. In the stock market, you can sell your investment in seconds. One click and you have liquidity. In uncertain times like 2025, when markets move fast, liquidity is power. It gives you flexibility to adapt, rebalance, and protect your capital. That's a huge advantage the stock market holds over real estate. Scene 3. Tangibility and control. But real estate has its own superpower, control. When you buy a stock, you can't control what the CEO or the market does. But when you buy a property, you can improve it, rent it, renovate it, or repurpose it. You have control over cash flow, tenant choice, and even tax strategy. That's why many investors love real estate. It feels more personal, stable, and manageable than market volatility. Scene 4. Passive versus active effort. Now, let's talk about the work behind each. Stocks are mostly passive. You buy, hold, and let your money work for you. You can automate everything, investing monthly through index funds or ETFs. Real estate is hands-on. It requires active management, finding tenants, fixing maintenance issues, paying property taxes, handling insurance, and more. Even if you hire a property manager, it cuts into your profit. So if you value time freedom, the stock market has an edge. But if you enjoy active control, real estate gives you more engagement and decision power. Scene 5. Risk and volatility in 2025. Every investment carries risk. But in 2025, those risks have shifted. For real estate, the big risk is high interest rates and declining affordability. If rates stay elevated, property prices might remain stagnant for a while. And investors relying on leverage, heavy mortgages, could face tighter cash flow. For the stock market, the risk is volatility. AI disruption, geopolitical tensions, and market corrections can make stock prices swing wildly. However, long-term data shows the stock market still beats real estate in average annual returns. Historically, U.S. stocks have returned around 10% per year over decades, while real estate averages closer to 4% to 6%, excluding leverage. Scene 6. Leverage, the real estate advantage. But real estate has a secret weapon, leverage. With $50,000, you can't buy $250,000 in stocks without taking big margin risks. But in real estate, you can buy a $250,000 property with a $50,000 down payment using a mortgage for the rest. If that property appreciates even 5%, your return on investment could actually be 25% because you controlled a larger asset with smaller cash. That's the magic of leverage. It amplifies gains. Of course, it can also amplify losses. If property values drop or tenants leave, you still owe the bank. So leverage is powerful but dangerous if used recklessly. Scene 7. Tax benefits. Another area where real estate shines, taxes. Real estate investors can deduct mortgage interest, property taxes, depreciation, maintenance, and travel expenses. They can even defer capital gains through strategies like the 1031 exchange. Stock investors, meanwhile, face capital gains tax whenever they sell at a profit. Long-term gains are lower, yes, but they don't offer the same level of deductions or write-offs. That's why many wealthy investors use real estate to shelter and diversify income. Scene 8. Cash flow versus growth. Here's where the real decision often lies. Do you want steady cash flow, or do you want faster growth? Real estate, especially rental property, gives consistent monthly income. Even during market dips, tenants still pay rent. The stock market, on the other hand, focuses on capital growth. Dividends help, but the big money comes from appreciation over time. If you're nearing retirement or want stable income, real estate might be your lane. If you are younger and can ride out volatility, the stock market offers bigger compounding power. Scene 9. Inflation and 2025's economic outlook. Now, let's talk about inflation, the silent wealth killer. Real estate tends to perform well during inflationary periods. As prices rise, property values and rents often increase too. That makes it a strong inflation hedge. Stocks can also beat inflation, but only if the companies grow earnings faster than costs. In 2025, with global inflation still slightly above central bank targets, both markets are adapting. Real estate investors are shifting toward multifamily rentals and affordable housing, sectors in constant demand. Stock investors are rotating into AI, energy, and healthcare, industries leading innovation and resilience. Scene 10. Accessibility for small investors. Let's face it, not everyone can buy a house in 2025. Prices remain high in many regions even after corrections. Down payments, property taxes, and maintenance costs add up fast. Stocks, on the other hand, are accessible to everyone. You can start investing with just $10 or $100. Fractional investing apps and index funds have opened the door for anyone to own a piece of the market. That accessibility makes the stock market the clear winner for beginners. Scene 11. Diversification. Smart investors know you don't choose one or the other. You combine both. Real estate gives stability and tangible assets. Stocks give liquidity and fast growth. Together, they balance each other out. A good rule of thumb for 2025: use real estate for steady cash flow and inflation protection, and stocks for long-term wealth building and compounding growth. Scene 12. The global shift. In 2025, both markets are being reshaped by technology and demographics. AI and automation are transforming businesses, boosting stock opportunities in tech, robotics, and data. Meanwhile, population growth and housing shortages are creating long-term real estate demand, especially in developing regions. That means the best investments might not be either-or, but where and how you invest. For example, instead of buying a house in an overpriced city, you could invest in real estate investment trusts, REITs. They let you own property portfolios without managing tenants. Or you could diversify into dividend-paying ETFs, balancing income with growth. The key is adaptability. The world is changing, and investors who evolve win. Scene 13. Emotional investing. Real estate feels personal. People fall in love with properties. They touch, see, and imagine a lifestyle. Stocks are abstract, numbers on a screen. But that emotional distance is actually a strength, because emotions can cloud judgment. You might hold a bad property too long because you are attached, or panic sell stocks because of short-term fear. In 2025's unpredictable world, emotional control is your most valuable asset. Scene 14. The real winners. So, who wins the battle, real estate or stocks? The truth is, it depends on you. If you prefer steady income, physical assets, and control, real estate wins. If you prefer flexibility, scalability, and compounding growth, stocks win. But if you combine both, you win bigger than either one alone. Because wealth isn't about choosing sides. It's about balance. It's about using both to protect and multiply your money across time. Scene 15. The 2025 Playbook. Here's a practical plan you can follow this year. Keep 3 to 6 months of expenses in cash. 2. Invest monthly in diversified stock exchange-traded funds, like S&P 500 or global funds. 3. Explore REITs or small rental opportunities for real estate exposure. 4. Avoid high-interest debt, it kills your investment growth. 5. Reinvest your gains. Let compounding do the heavy lifting. That's the 2025 Wealth Building Blueprint. Real estate and the stock market aren't enemies, they're teammates. They serve different roles in your financial life. Real estate builds security. Stocks build speed. Together, they build freedom. So stop waiting for the perfect investment. Start with what you have, where you are, right now. Because the only bad investment is the one you never make. If you found this video helpful, hit like, share it with a friend, and subscribe for more financial wisdom every week. Because 2025 isn't about guessing where the market goes. It's about positioning yourself to win, no matter what happens.